We're going to stick with our top story, the 10-year Treasury yield falling to its lowest level since 2016. That is raising concern over global growth as central banks in India, New Zealand, and Thailand all cut interest rates more than investors were expecting. President Trump reiterated his demand that the Federal Reserve should cut rates, quote, bigger and faster. He tweeted, "3 more central banks cut rates. Our problem is not China. Our problem is a Federal Reserve that is too proud to admit their mistake of acting too fast and tightening too much." And I was right. They must cut rates bigger and faster and stop their ridiculous quantitative tightening now. Yield curve is at too wide of a margin and no inflation. We're joined by today's panel, Yahoo Finance's Rick Newman and Scott Gamm. I'm going to start with you, Scott. No inflation is the problem. The Federal Reserve is trying to juice inflation, but cutting rates hasn't, it hadn't done it yet.
Well, and we did end quantitative tightening. It ended on August 1st. I don't know if the president was watching that press conference. That was the big announcement. Rate cut, and we ended the QT. It was supposed to end in September. Look, I think President Trump certainly gave some credibility to these other central banks that we don't talk much about. They're cutting interest rates. Is that significant to this market? I don't know. I mean, certainly I think the central banks to focus on beyond the Fed are obviously the ECB and the BOJ, and we know they're moving in that direction potentially to continue to ease policy. Look, I don't know what the Fed is supposed to do now. I mean, they've cut rates. Will they do it again in September? Perhaps. But we still have 6 more weeks to go until that Fed September meeting. I mean, are they going to come out ahead of that and cut rates? I mean, what does the president want the Fed to do right now?
Cut rates some more.
Come out. They won't
do it.
They can't do it in the meantime. The president doesn't want necessarily for anybody to do anything except listen to the sound of his voice.
He knows all this. He's scapegoating. I mean, this is the pattern we ought to be familiar with from the beginning of his presidency. He's lining up everybody else whose fault it is that whatever bad thing is happening. The stock market is going down. Growth is slowing. Growth overseas is slowing. It's not his fault. It has nothing to do with his trade war or his tariffs or any policies of his. It's the Fed. It's being behind the curve and so forth. Can I just call out the thing that stops me on this series of pronouncements Adam just read? Trump is criticizing somebody for being too proud to admit mistakes. I must state the obvious. This is coming from somebody who probably last admitted a mistake of his own, like in 2nd grade.
Can I throw this out there, though? Because, Scott brought up the issue of these other central banks. What kind of impact would that have on the markets? Is it possible that investors are seeing, it was India, it was also Thailand, New Zealand. They're cutting rates because global growth is slowing down. And it could be because of the China trade war. It could be for all kinds of reasons. But at the end of the day, where are we going to be selling our goods? Where are our companies internationally going to be making money? Isn't that a concern?
Well, I think it's the slowing growth that is the concern. I mean, it's not the interest rate per se in Thailand that anybody cares about. It's that in Thailand, in these 3 places in disparate parts of the world, they too are seeing the slowing growth that we're seeing in different parts of the U.S. economy, certainly in the European economy, everywhere, actually. I mean, I don't think, I'm trying to think of some place that's not showing signs of a slowdown. Maybe Japan is not as bad off as everybody else, but they've got chronic problems.
Right.
So it's just popping up everywhere.
U.S. is still pretty good. Hey, here's the silver lining in all this. Tina, there is no alternative. U.S. stocks are the place to be if the rest of the world is slowing.
And by the way, we should be happy that we have positive interest rates in the United States. I mean, that's a good sign. That's a good thing. I mean, we're talking about interest for now. We're talking about interest rates at around 2.25% short term.
And year to date, the S&P 500 is still up over 10%.
Absolutely.
So I mean...
Wow, you guys are full of silver linings this morning.